It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Reopening trade. Stock futures rally as a likely end to the government shutdown lifts investor moods. Treasuries also climbing as the cash market returns from the holiday. Wall Street at the White House. President Trump plans to host a dinner tonight with financial CEOs including Jamie Dimon, David Solomon and more. And in AI we trust. AMD, Infineon and Hon Hai all out with positive growth outlooks boosted by demand in artificial intelligence. So it was a rocky session yesterday. We did end up 0.2% for the S&P 500, down though for the Nasdaq. Today it's a different story. The prospect of an end to the government shutdown really infusing some enthusiasm into this market. After all, the last 4 government shutdowns have seen the S&P rally afterwards. Same for Russell 2000, and we have also the betting odds now at 90% that shutdown will end today, day 43. Can you believe it? Let's take a look at bonds because, of course, we're reopening after Veterans Day. We are seeing the 2-year yield down about 2 basis points, 3 basis points across the 10-year part of the curve, and then just under 2 basis points at the 30-year yield. So a little bit of movement here, but essentially the story is perhaps the soft ADP data causing some demand for treasuries, and also, of course, Fed rate cuts and the betting on that for December. That's now at about 70% of a chance for a Fed rate cut. So all that is being priced in today. We'll see how things go. We're 4.5 hours from the open. So let's get a look at some individual movers now in the pre-market. Over to London and Valerie Teitel. Good morning, Valerie.
Good morning, Bonnie. Let's start with a check on AMD. It is soaring in the pre-market, up more than 5%. This is NVIDIA's main competitor when it comes to that advanced AI chip market. Now, AMD, their CEO, was out with a prediction that over the next 3 to 5 years, they're going to see on average a 35% growth when it comes to revenue. And specifically, their AI data center revenue, she's predicting, could run at near 80% growth over the next 3 to 5 years. She also had some bullish comments when it came to investment in data centers. She said that the largest owners of data centers have been telling her that they are continuing strong investment into that space, saying that there has been no leveling off when it comes to data center investment. Next, let's move on to the space industry. Rocket Labs out with a beat in revenue last night after the bell. The shares are higher by 2.5%. The company is on track to beat its launch record for the year annually in the fourth quarter. They did announce, though, a pullback when it comes to the timeline of their larger rocket launcher to launch larger satellites into space. Bonnie, this is key because this is a component where they wanted to compete directly with SpaceX. So kind of a positive and a negative for Rocket Labs. Lastly, I want to touch on the payments industry. Bill Holdings, there has been sources telling Bloomberg they have solicited both private equity and industry leaders for a bid for the company. The shares are rising 13% in pre-market. Now, the business payments industry, Bonnie, has seen a lot of consolidation over the recent years. So this is just another sign of a trend. But Bill Holdings has been suffering from intense competition in that space.
Yeah, and an activist investor as well with Starboard there, Valerie. Thank you so much, Valerie Teitel there in London. And later this hour, we'll speak to Frank Monkam of Buffalo Bayou on the year ahead investment plan. But first, our top story, the U.S. House of Representatives will be back at work today for the first time in nearly 8 weeks to vote on a bill that would end the longest government shutdown ever. For more, we're joined by Bloomberg Managing Editor for the U.S. Economy and Government, Mario Parker. So, Mario, take us through the steps. What has to happen?
Well, next, as you mentioned, the House of Representatives is back after an 8-week sabbatical away from D.C., if you will. Some procedural votes have moved forward, both in the Senate and then in the House. And the House, presumably, optimistically, the House will vote on the shutdown deal later on this afternoon during the U.S. Day. Hopefully it reaches President Trump's desk, and then things start to happen to restart the government from there. Now, is there anything that could provide an obstacle or a blockage to this, or can we expect that at some point today we will have an open government once again? Oh no, there's always an opportunity or a challenge there for this this Congress, this current political landscape that we find ourselves in Washington. Nothing is done until it is done. There's high likelihood right now. There's optimism, more optimism than there's been in the previous 8 weeks or so. But until it reaches the president's desk, until he signs it into law, there's nothing. There's always some room for something to go awry. One of the reasons, I mean, there's political pressure on both sides. Both the Democrats and the Republicans are feeling some pressure here. A lot of the backroom dealing, willing and dealing. Again, the optimism is high. The likelihood is the highest it's been. I would probably handicap it well above 90%, but until it's a done deal, it's not a done deal.
Yeah, exactly. Now, we know as well that President Trump is planning a dinner tonight, if you don't mind, for Wall Street's top executives, David Solomon, Adina Friedman, Jamie Dimon. What will they discuss, do you think, Mario?
I think a few things will be on the table. You have to imagine that tariffs will be front and center. H-1B visas should be on the docket as well. And then the broader state of the U.S. economy. One of the things that did come out of the shutdown talks, one of the things that did come out of some of the U.S. elections last week was the president finds himself a bit on his back foot in terms of economic messaging. Whether or not the Wall Street titans that you mentioned are able to give him some modicum of advice that he heeds, we'll see. That'll be one of the things we want to see coming out of that dinner. All
right, we'll be keeping a close eye. Mario Parker, thank you so much for joining. Well, in the UK, cabinet feuds spilling into the open. UK Health Secretary Wes Streeting has denied plotting to oust Prime Minister Keir Starmer. Bloomberg has learned that allies of the Prime Minister privately accused Streeting of planning to challenge for the Labour Party leadership. This comes just weeks before the government is due to unveil a contentious budget. For more on this, I'm joined now by Bloomberg's Lizzie Burden. So, Lizzie, what exactly do we know about any kind of potential leadership challenge that might be waiting Keir Starmer in the wings?
Well, Vonnie, Starmer's team told us that the market wouldn't like it, and indeed we are seeing gilt yields up on the 10-year. We saw investors buying gilts yesterday, so perhaps we can look through that. And we've had Wes Streeting, the Health Secretary, denying that he is making this challenge just this morning on the airwaves. But it wouldn't be the first time that his name has been swirling around, because he is 42, so younger than Starmer. He is charismatic. He is from a council estate in London. He's gay. He'd be seen as a fresh face of the party when Starmer has a personal rating that's been languishing behind Nigel Farage's, the Reform UK party leader, of course. And it's previous that we had Wes Streeting's name floated because he was so openly criticising President Donald Trump when he came for that second state visit earlier in the year. So Wes Streeting breaking with Starmer's softly approach to the US president. But what's interesting about Streeting is that he only won his seat by a razor-thin margin at the last election. So he might not even be in the Parliament at the time of after the next election. But the timing, as you say, of this, Vonnie, is notable because we are just weeks away from that budget. It looks like the Chancellor could break her manifesto and raise income tax, which would be hugely unpopular. That could create a window of opportunity for a leadership challenge. But look, this political instability, if we lose Starmer, smacks of the Conservatives when we had Boris Johnson, followed by Truss, followed by Rishi Sunak as well. And that is exactly the sort of instability that Keir Starmer promised to end.
Yeah, I mean, UK business chiefs are urging the Chancellor, as you were pointing out there, Lizzie, to ease energy costs, avoid raising the tax burden on corporate Britain. That would be to the detriment, obviously, of, you know, British citizens, right? So she's in between a rock and a hard place. Will she be becoming under more pressure now if this leadership challenge is underway?
Well, the Chancellor feels that she's got the bond market behind her. Remember when there was that gilt sell-off when the Chancellor cried and there was speculation she was going to be fired? Well, actually, just this morning, Bloomberg Economics put out some really interesting research saying that if she is able, even if it's politically unpopular, to boost her fiscal buffer, that could mean that gilt yields fall on the 10-year by as much as 50 basis points, so winning her £6 billion in terms of reduction in the debt interest payments that she needs to pay. way. Perhaps if she can just get through this budget and get through that, it would give some political strength to the Labour Party. But she also got criticised yesterday by the opposition parties for that 5% unemployment figure. You've had the Bank of England's Megan Green pouring cold water on it yesterday, saying, look, we can't trust these labour market figures completely because of data collection issues, and actually the hit to the employment figures that we've seen because of the Chancellor's tax rises at the last budget may be already in the rear-view mirror. So we look ahead to what she's going to do in terms of the tax picture at this budget.
All right, and we'll be listening out for PMQs at 7 a.m. Eastern Time. Lizzie, thank you so much. That is Bloomberg's Lizzie Burden. Now to other top stories trending on the terminal this morning. Two Sigma's assets under management in China are now more than $1.4 billion for the first time. It's now the second global asset manager behind Bridgewater to grab a top spot in the country, which has been dominated by Chinese firms. Two Sigma declined to comment. JPMorgan has started rolling out a deposit token to institutional clients. The JPM coin allows users to send and receive money through a Coinbase-affiliated public blockchain. The launch marks a significant expansion of JPMorgan's blockchain efforts and comes as global banks experiment with digital assets. And Hon Hai sees more AI-driven growth in 2026. Net income for the company surged 17% in the latest quarter. Its rosy outlook offered some relief to investors who've been concerned about an AI bubble. Coming up, world leaders gathering in Brazil for the COP30 climate summit. We'll discuss what to expect next. This is Bloomberg.
As an industry, if I may say so, we are really bad at calling oil demand. We continue to call for peak oil demand and then just push it further and further back every year. And I think our view has always been that, yes, even if total liquids demand kind of peaks, say, late 2030s, even early 2040s, the reality is it's not going to collapse. Even by 2050, we have oil demand at around 100 million barrels per day. And I think that's the crucial thing.
The IEA reinstating a scenario where oil demand continues to climb out to 2050. This as COP30 is underway in Brazil with little expectation for big declarations. Plenty of smaller pledges, though, potentially on the cards. Let's bring in Shaheen Contractor, Bloomberg Intelligence Senior ESG Analyst, for more. Shaheen, just on the IEA prognostication there, right? And we've heard Dan Yergin and people like that talk about this too. We're nowhere near peak oil demand. It's going to continue. How does this impact the decarbonisation story?
So, Vani, I think this, it does put a damper on the COP conversations that are going on as we speak. I think what it does is it brings into focus the topic of adaptation, and COP has been dubbed the Implementation and Adaptation COP. So it brings this growing recognition that it's not just about mitigating emissions, but also adapting to, the physical impacts of climate change.
And this is every single company and every single country. It's everybody adapting. And explain to us what adaptation means.
Sure.
It's to do with cleanup, right?
So it's, let's just call it preparing for your next storm and cleaning up after your last one. So I'll give you a number. So the US, for example, we estimate it spent about $1 trillion on climate damages. So again, cleaning up after previous storms and preparing for the next. So it's learning to live in a world where the physical impacts of climate change are being felt.
And it's a vicious cycle because you wouldn't have to do so much cleanup if potentially we got to our goals faster. And are they even goals anymore? There's so many questions. But I did want to ask you about the green trade, because we're seeing, according to your research, ESG funds with withdrawals, right? People are just pulling out of them left, right and centre. It could be a political issue because obviously climate and climate change is not the most popular thing right now, especially in the United States. But it could also be that we've seen huge run-ups in some of these green stocks.
Sure. So I think climate funds in particular are seeing outflows. And I think that's really driven by this negative political environment. It's uncertainty in policy that is driving this. And I'll give you a disconnect. I don't know if this surprises you, but clean energy is one of the best performing themes of the year. So there's this very big disconnect where the funds are outperforming, but they are seeing outflows. And that's just uncertainty.
Literally, the S&P Global Clean Energy Transition Index just hit a 52-week high last week. It's up 53% this year.
30% outperformance.
Yeah, it's incredible. So, I mean, companies can make the economic claim to decarbonize and to do better, right? It may not be politically very popular. So what's happening on a company level? Are they continuing with their policies because it makes economic sense, or are they pulling back just to please certain administrations?
So it's really both. So on one hand, companies are continuing to do what they do, not shouting it from the rooftops, but others like Wells Fargo earlier this year, they are abandoning climate goals. And I think an unintended consequence that people don't realize is divestment risk from your, let's just call it ESG or climate investor base. And some companies like EDP, Simrise, these are the ones I'm watching. Over 5% of their market caps are in ESG and climate funds. And any rollback can really spark a divestment from this investor base. Not many people realize that.
It's true. Now, the AI revolution is going to demand phenomenal energy, and a lot of that is going to come from renewables, right? So is the trade coming to be played out, or is there a lot more to run?
Well, that is what's fueling this clean energy outperformance. So we estimate that renewables is going to, it's fast to deploy, it's going to fill the gap, and power demand is going to increase about twofold. Whether it's played out or not, I don't know. I mean, the needs for AI and power demand are something that, it's ever increasing.
Now, we're at COP30. There have been 30 COPs, right? So there's been a lot of COPs where perhaps not that much has been achieved.
Sure.
But what do you expect, if anything, that will be the high point of this COP? And maybe you could just throw in a comment about biodiversity funds, because they're also growing.
Sure. So I think, we have a few days to go to see what the outputs are. I think what I'm particularly interested in is the fossil fuel story. So last year, countries agreed to phase down fossil fuels for the first time. None of this has been reflected in action plans. The IEA story that you mentioned is completely contradictory to this. So that's what I'm really watching for. And the second is adaptation. And COP is in Brazil this year, so biodiversity is a big topic, and it's, like you mentioned, a bright spot in the, let's just call it environmental funds, where those specific funds are seeing inflows, contrary to the broader environmental fund space that is seeing outflows.
All right, Shaheen, fascinating research. Thank you so much for joining us this morning, and we'll keep an eye on what happens at COP30. That is Shaheen, contractor of Bloomberg Intelligence. Coming up, the Supreme Court extends an order that allows limits on food stamp payments. And a look at what else is making headlines in your front page news. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Shares of Infineon climbing as the German chipmaker anticipates 2026 revenue to return to growth as the global boom in AI data centers raises its sales outlook. Infineon CFO Sven Schneider spoke with Bloomberg's Guy Johnson.
If you look into the revenue development for AI, and for us, AI is powering AI from grid to core, has developed in a very steep way. 2 years ago, it was 250 million revenue. Last fiscal year, more than 700. And as you said, we just raised the guidance for our AI revenue for this year from 1 billion to 1.5. So we are more than doubling in this fiscal year, and it will not end in 26. We expect the addressable market for Infineon for powering the AI data centers in the magnitude of 8 to 12 billion. So it's a significant idiosyncratic growth driver for the company going ahead.
How much precision do you have at the moment in terms of the outlook on that space, and in terms of being able to guide investors to what you are going to see next? How much precision do you have there?
Yeah, so first of all, the 8 to 12 is the addressable market. So it would assume 100% market share, which is probably not the most realistic assumption. 1.5 is the revenue we are generating this year. How much visibility is there? Of course, we have a very broad coverage of all major customers, be it cloud providers, be it processor makers, which gives us a great visibility into the business. You also may be aware that we entered into an agreement with NVIDIA to cooperate on the development of a total new architecture, which is 800-volt DC-DC. So there's a lot of visibility in what's happening, but of course it is and remains a very dynamic market.
That was Infineon CFO Sven Schneider speaking with Bloomberg opening trade anchor Guy Johnson. Time now for your front page news. First up on the New York Times, the Supreme Court deciding to allow the Trump administration to withhold food stamp payments for roughly 42 million Americans for 2 more days. The new order neither gave a vote count nor did it include the court's reasoning. Next, the Washington Post is reporting Venezuela has ordered massive mobilization of its military arsenal. This as a U.S. aircraft carrier and 3 warships enter waters in the region. Venezuela's defense minister said President Maduro had ordered almost 200,000 soldiers deployed as part of the special operation. And finally, the Wall Street Journal leading with the White House exploring new measures to curb the influence of proxy advisors such as Gas Lewis and ISS. The firms are under fire from CEOs such as Elon Musk, who calls them corporate terrorists. Jamie Dimon also says they have conflicts of interest. The administration is said to be discussing at least one executive order that could include a broad ban on shareholder recommendations. Coming up, just 34 trading days left in the year, would you believe? We'll discuss what your year-end investment plan should be with Frank Monkam of Buffalo Bayou. That's next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Reopening trade. Stock futures rally as a likely end to the government shutdown lifts investor mood. Treasury is also climbing today as the cash market returns from the holiday. Wall Street at the White House. President Trump plans to host a dinner tonight with financial CEOs, including Jamie Dimon, David Solomon, and more. And apparently in AI, we trust again. AMD, Infineon and Hon Hai all out with positive growth outlooks boosted by demand for artificial intelligence. So look at those futures pointed higher. Not a huge move, but don't forget we did finish up 0.2% on the S&P yesterday, even though it was a really rocky session. For the Nasdaq, we were down 0.3%. Today again, those futures pointed higher. And Russell 2000 futures pointed higher as well. We did have that soft ADP data yesterday, so that might be potentially why we're seeing a little bit into treasuries. A little bit of movement across the curve, down 3 basis points at the front end, not down as much at the longer end. But of course, there is the idea that we'll have the government reopen. A 90% probability, in fact, according to the betting markets, that will happen today. And that's infusing this market with enthusiasm. And then, of course, we're looking ahead to the Fed and the potential for a December rate cut. 70% chance or so now, according to markets. So not a done deal, but nevertheless, the probability is in the cut's favor. Let's put it that way. Let's get to some individual stocks to watch now. Here's Valerie Teitel. Valerie.
Good morning, Vonnie. Let's start with a check in the tech space. We're seeing shares of AMD rising in the pre-market just shy of 5%. And this comes after some pretty bullish comments from the CEO at a company event yesterday, talking about revenue growth over the next 3 to 5 years being around the 35% range. She also had some bullish things to say when it comes to AI data center revenue, that being 80% over that same time horizon. She also said that she sees from her clients, from these data center owners, that they they are not slowing down their pace of investment. So these bullish comments seeing the likes of AMD and other chip makers rise in the pre-market this morning. Next, let's move on to some possible M&A activity. Bill Holdings, this is a company that operates in the business payment space, is under some pressure by an activist investor, Starboard Value, in order to solicit some bids for the company. Now, sources have told Bloomberg that they are looking at private equity offers as well as offers from other industry leaders. Now, the payment industry has been under intense competition. We have seen a lot of consolidation in this sector, so perhaps we're due for some more, with Bill Holdings up 13% on the back of this news. Lastly, let's end in the apparel space on sneakers. This is the sneaker company owned by Roger Federer. It is based in Switzerland but listed in the U.S. Shares are climbing in the pre-market, up over 9% as they saw their sales in Asia and Europe soared in the previous quarter. They have been posting some pretty interesting competition to those more dominant sneaker players such as Nike and Puma of late. Now, I should note, though, that they are bucking the recent trend with this rise. On Holdings has been down around 35% this year on the back of tariff worries, especially the tariff discussions between the U.S. and Switzerland have weighed on the shares, but they're rising in pre-market this morning, up 9%.
That is a nice gain this morning. Valerie, thank you so much. Valerie Teitel there in London. Frank Monkam of Buffalo Bayou says, get yourself a 30-day closing plan. It's hard to believe, but there's just 34 trading sessions left in the year. Well, with the S&P up 16% so far and the Nasdaq 100 up more than 21% and lots of uncertainty out there, what should that game plan be? I'm pleased to say Frank joins us now. He's head of macro trading at Buffalo Bayou. So, Mac, if we haven't had a plan up to now, what are we supposed to do for the last few days of the year, given that we only have fewer days than the government has been shut down, would you believe?
Hey, Bonnie. Pleasure to be here. Well, like I said, this is the time of the year typically where, we try to figure out how to close in the year, right? I mean, there's, people think about tax harvesting, those kind of things in Center Rally. But this year, it's been a little bit different with this government shutdown that we've had. And I call it a 30-day closing plan, meaning there's literally 33 to 34 days left in the year. And you basically have two major macro sub-themes really to trade around to the end of the year. And the first theme is basically that, going to the end of the year, right, you've got to figure out what the DC reopening trade looks like. And obviously, Bill's really bullish for risk asset. But the problem with this reopening trade is that it also comes with the end of the data blackout. And that's going to introduce a lot of choppiness to markets because, markets participants are going to try to, retroactively think about how to reprice data that is perhaps stale and also poorly collected. Because we saw, data collection and survey windows being truncated during the shutdown, and that's going to create some volatility once we start returning to full data prints.
We might have got a sneak peek of that yesterday with the ADP data, which was slightly softer than we were expecting. Typically, shutdown reopens are good for markets, but are you saying maybe just wait a little on this one?
Yeah, just wait a little on this one. I think, even though when you think about the equities market, I think, positioning has kind of come off, the extreme highs here. So we're not saying positioning is super bullish, but it's probably at a place where, is less of a headwind. I mean, we're looking at discretionary positioning around, the 75th percentile. No, it's a 35th percentile rather, and a systematic positioning being around the 75th percentile, which isn't too bad. But what I'm saying here is that, this center rally is really set up, every year from a seasonality standpoint, especially when you have buybacks coming back to kind of offset some of the, the deleveraging that we've seen from the retail community, over the last couple of weeks. But again, like I said, with the data coming in and being very hard to read and being very, very nebulous, I think we're not going to have a straight, a smooth line sort of center rally towards the end of the year. I think we might have some choppiness, along the way. And volatility is yet to reflect that. I'm not calling here for major pullback, but I think it's just not going to be your typical smooth sailing sort of center rally.
Yeah, because every time we get some kind of an answer to a question, we're back below 18 on the VIX. The same again today, we're down again on the VIX. Right. So talk to us a little bit about the AI trade. I mean, it seems like we're getting different headlines every day, capacity constraints, build-out constraints for data centers, but yet growth, will be fantastic next year. What are you supposed to do with all of that?
Yeah, I think the AI trade really, whenever you have a theme that's really central to everyone, right? It's there's going to be capital flying into the space. Obviously, when valuations are stretched, it just makes us vulnerable to these kinds of worries. But I don't think that trade is by any stretch of the imagination being derailed. I just think there are going to be patches throughout the cycle where we kind of question the trade and question the valuation. But at the end of the day, it's a story of liquidity, right? We have a Fed that's still leaning very, very dovish here. I mean, we talked about the probability of the next cut here in December having ticked down since the Fed's sort of, quasi hawkish pivot during the last meeting. Not pivot, but, rhetoric. Mm-hmm. But I think, we're still pricing in a Fed that's going to be cutting in December and probably 2 to 3 times next year. So that's pretty liquidity positive. And I think at the end of the day, that's what's going to continue to support risk assets. In my opinion, what really stands as a headwind to risk assets potentially is the job market completely unraveling or having a rate stand trim.
And in terms of the bond market, you're looking for the curve to twist, steepen.
Yes.
So that would be the answer to that. Now, would you still be 60-40 in a portfolio, or would you be, skewing a different way?
Yeah, well, the bond market is really looking at 2 major dynamics, right? The front end is really being anchored by Fed cutting. I mean, I think there's just clearly, the path they're going to be leaning towards. But the back end still is very vulnerable to fiscal dominance concern and also inflation concerns. So that's my reason for having high conviction on the curve steepening here in the medium term. The 60-40 portfolio, obviously, it's something that has come to light here recently and has been exposed in terms of lacking the ability of really providing investors with the full range of risk parameters that they need to make sure that the portfolios are balanced properly. So I think gold has been the one asset class that's slowly but surely being introduced to investors' portfolio here. Some people have talked about the 60-20-20. Perhaps that's a bit excessive given how big the treasuries market is. Having to shift allocations from treasuries to gold in that level of magnitude is going to be very disruptive for markets. But I think gold definitely has its place in the investors' portfolio here.
And despite everything that's going on, is there still time in this last 34 days for a Santa Claus rally?
I mean, yes, there is. I just think it's going to be a little choppier than we used to, which is fine. It's just a matter of being able to navigate that and understand that the data that we're going to be seeing is going to be very, very nebulous to read. I think one thing, though, the investors that need to take into account going forward is that the importance of these private data providers is going to be paramount going forward. Because I think we've all learned that there's been a credibility issue, perhaps some issues around independence around some of these institutions. So having gone through this stretch with the data blackout is just kind of raising investors' attention to the fact that they have to rely more on private sector data going forward.
We have to get through these next few weeks and get things back to quote unquote normal. Frank, thank you so much. That is Frank Monkam of Buffalo Bayou. Coming up, House lawmakers set to vote to end an historic government shutdown. More next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. End in sight for the longest U.S. government shutdown ever. The House of Representatives will be back at work today for the first time in nearly 8 weeks to vote on a bill which would relieve the sharpest pain points, including delayed SNAP benefits, air travel chaos, and government worker furloughs. Joining us with the latest is Bloomberg's Hon Hai from Washington, D.C. So, John, what time is that vote? We're very, very impatient.
The vote will be, the votes will begin today. Now, they'll take several hours because there'll be debate, there'll be, meetings, that we won't actually see on camera, as Speaker Mike Johnson makes absolutely sure that he has the votes to get this through. But it could be signed, perhaps be signed by President Trump as early as tonight.
That would be a relief to a lot of people around this country. Now, it seems as well on a separate story that Trump aides are reviewing funds for New York City. This, of course, after the Mamdani win. Can you give us a little more detail into this?
Well, as my colleague Skylar Woodhouse reports, yes, several people in the Trump administration, or some people in the Trump administration, are considering perhaps scrutinizing or even withholding money that's been earmarked for New York. Now, this is a skirmish, if you will, perhaps a much larger battle between Mr. Mamdani, the Democratic Socialist mayor-elect of New York, and President Trump, a New York native, after all, who tried very hard to convince enough New York voters to not elect Mr. Mamdani. That, of course, failed. Now, so we'll have to see what the next moves are. Mr. Mamdani has pledged to work with the Trump administration, but has vowed also not to be bullied.
Yeah, exactly. Well, tonight in D.C., 7:30 p.m., people are going to be in their best gear because Trump is having a dinner with Wall Street executives, Jamie Dimon and Dina Friedman, David Solomon and so on. What do we anticipate they'll be speaking about, the top priorities for that conversation, John?
Well, I mean, President Trump has allies on Wall Street and has always tried to perhaps he enjoys their favor, the good relations with them. So, but some of them, Mr. Dimon among them, have not been particularly keen on some of his policies. I imagine tariffs will come up, the state of the economy, the labor market. And perhaps also the shutdown, the effects of that. We're starting to recover from it. The country was beginning to, or will be beginning to recover, but it'll take some time for the effects, flight delays, et cetera. So, I mean, all those, it'll be the economy, it'll be tariffs, trade.
All the hot button issues. Yep.
Agenda.
About 14 hours from now, they'll all be sitting around a table. John, thank you so much. John Harney there in Washington, D.C. Well, as the president plans to host Wall Street executives at the White House, JPMorgan has started rolling out a deposit token called JPM Coin to institutional clients. Bloomberg finance reporter Jenny Serrain joins us now. So, Jenny, how much is the Trump administration's embrace of digital assets driving how JPMorgan and other Wall Street banks interact with the industry?
I think it's really been a sea change for these banks. So they've spent years, kind of playing on the outskirts and expressing, some mild curiosity. And now you really see lots of the big banks going after this space in really interesting and new ways. And a lot of that is driven by the fact that all of a sudden they have regulators and watchdogs overseeing them that say, we're okay with the experimentation here. We have an administration that is kind of full force ahead and passing legislation and trying to really entice investor interest, make the U.S. kind of the global hub for crypto. And so you kind of see these banks following suit and trying to fully embrace it in much the same way that their regulators and the broader Trump administration really has.
And they're able to do it fast when they decide to do it. Now, on a separate story about AI, MUFG saying it needs to hire more bankers that specialize in AI as part of its recent tie-up with OpenAI. We've been reading so much about AI taking jobs away. Are we going to hear more examples like this where AI is actually bringing jobs to finance?
Yeah, I think that will be the really interesting kind of trend to watch, because I think so many of the bankers and traders and everybody that we talk to obviously are concerned that, oh my goodness, could the robots come take my job? Could AI, replace me one day? But right now, what we hear from a lot of these banks is actually we don't have enough. Like, we need more AI specialists. We need more folks who are really steeped in this technology to kind of come in and show us the ropes and bring this technology and really embed it throughout the bank. And so right now we're hearing a lot more that we need to be training people, we need to be retraining people. And so right now, at least, the narrative has not been one of job cuts, but really been one of investment and kind of seeking out more talent. But at the end of the day, I think they are all hoping that these investments one day, produce a good return and cut the costs the way they expect it to. And so I think that's still in the offing, but right now, when we're still in these early innings, a lot more of it is about job growth and retraining employees rather than getting rid of thousands and thousands of jobs.
Yeah, positive spin, at least for now. Jenny, thank you so much. Jenny Serrain there. And staying in the AI space, AMD, Infineon and Hon Hai all out with positive growth outlooks boosted by the AI boom. Bloomberg's Tom McKenzie joins us now for more. So, Tom, what were the interesting points to take away from all of these earnings reports?
I mean, Vonnie, the key thing that stands out to me of all those three companies is, my goodness, their earnings would look soggy if it wasn't for AI and the data center build out, because it's all those things and the fact that there is this build out and they're exposed to it that has lifted the prospects for all of those companies. I'll start with Infineon. It's the German listed company, of course. It makes the silicon that helps in terms of power efficiency that goes into data centers. But typically, and still more than 50% of its sales come from things like autos and the industrial space. That part of the business remains pretty weak. In fact, the CFO telling Guy Johnson of Bloomberg TV he doesn't see a significant turnaround on that space. Certainly not even next year, and that the headwinds will remain when it comes to that part of the business. But they are benefiting from their exposure to AI data centers to the point where they've actually lifted their forecast on sales for the data center part of the business by 50% just from the previous quarter. So it's that part of the business that is really driving the prospects into 2026. Across that business, the Infineon business, they're projecting pretty modest return to growth. But again, it would be a much bleaker picture if they didn't have that data center exposure.
Yeah, for sure. You know, speaking of bleaker picture today, can we go back to the NVIDIA story from yesterday? So we saw SoftBank ADRs rising yesterday, right? And now they're falling in Tokyo today, the stock falling in Tokyo today as much as 10% at one point, although it didn't close out that far down. Is this because investors were spooked that SoftBank was getting out of NVIDIA? I mean, you have to point out, I think, in this conversation that the stock is up 138% year to date, and it did announce that stock split, and perhaps investors were waiting for that, and they're just taking some chips off the table.
I think those are all valid points, Vonnie. Absolutely. The stock split was important, of course. They want retail investors to get more exposure. The stock has run up very high this year, to your point as well. So maybe some profit taking. But there are some, and the Bloomberg team have been talking to some analysts who've been looking at this, who are concerned about what signal this sends. I mean, there was a lot of chatter yesterday about whether or not it signals SoftBank and Masayoshi Son's concerns about the data center build out. Others are saying, look, you're taking money out of a very, very profitable business, Nvidia. Your investments in Nvidia, $5.8 billion US. You've sold off that entire stake, and guess what? You're putting it into OpenAI, which is not making a profit. So what's the rationale there? Masayoshi Son is making a long-term bet on OpenAI, on infrastructure, and on the deals that he wants to secure around Ampere, which is the chip design company. He wants to get that across the line. ABB's robotics business. That is the focus for him right now, that future bet for Masayoshi Son, releasing that liquidity. But some investors taking a bit of a cautionary note on that action yesterday from SoftBank.
And it'll be interesting to see how it trades throughout the week, obviously. And there are other things going on at SoftBank too. But, you know, will all of its AI investments be related in some way to OpenAI? Or, you know, does it have the liberty to sort of go elsewhere and maybe fund AI investments from other countries?
Well, certainly SoftBank is looking at exposure beyond OpenAI. They have within their portfolio companies like Runway. They have companies like Perplexity, both of those startups performing very well and seeing incredible growth as well. They're building, of course, out in Japan in terms of the infrastructure story around AI, but the big focus is, of course, for SoftBank on the infrastructure story is on the Stargate project in the US. It was interesting to get an update when you think about the infrastructure story in the data centers from AMD, who just a few weeks ago came out with results and forecasts that didn't really inspire investors. But the update yesterday from AMD, that the competitor, of course, to NVIDIA, was much more bullish. So over a 3 to 5 year period, they see revenue growth topping 35%, more than 35%. They see margins of more than 35% over that same 3 to 5 year time frame, and profits of more than $20 per share, again, on that time frame. And they're seeing no slowdown in demand for the chips that go into those data centers. They're looking to they're closing in on about 10% in the market share for those AI accelerators versus 85 to 90% for NVIDIA. But they've made a mark. They've got the partnerships with OpenAI and Oracle, and painting a brighter picture, at least for their prospects, over that time horizon.
Tom, thank you so much. That is Bloomberg Tech Europe host Tom McKenzie. Can't wait to tune into the next Tech Europe. Coming up, we're going to get you set up for your trading day. There's a host of Fed Speak on deck. This is Bloomberg. Now, look at what's ahead today. So we get Fed Speak galore. We're going to hear from Williams, Paulson, Myron, and lots more all throughout the day. National Economic Council Director Kevin Hassett speaks with Carlyle co-chairman David Rubenstein. That's at 12:30 p.m. Eastern. Plus, the Treasury will auction $42 billion of 10-year notes this afternoon. And then tonight, of course, President Trump set to host financial CEOs, including Jamie Dimon, Adina Friedman, and David Solomon at the White House. Here's how your market is set up for the trading day. Surveillance is next. This is Bloomberg.